What is up, YouTube? Good morning, good afternoon, good evening from wherever you are in the world. Welcome back to the Williams FX. If you have not subscribed, kindly subscribe. We're trying to run up our subscribers list up to 1,000 before the middle of 2022. And then, because we have so many things in lock for you guys. And I want you guys to just please subscribe, turn on the notification button, because there is so much value that I will be sharing with everyone on my YouTube channel. And if you know me from Twitter, I'm Olu of Trades. You can follow me on Twitter at Olu of Trades, and also on Instagram. It's a new Instagram account, Olu of Trades as well, or the Williams FX. Follow me on Twitter, follow me on Instagram. I would actually love to have you in my community, and I would love to see you grow. Okay, so if you've not subscribed, kindly subscribe, turn on the notification bell, follow me on my social medias, and also like this video and drop a comment or whatever you want me to talk about in the next video. So let's quickly move on. I would like to talk about liquidity today. Trust me, guys, this is one topic that gives people a whole lot of headache, and that's why I'm talking about it. What is liquidity? Actually, what is liquidity? Liquidity is money. Liquidity means money. If I'm talking, I could say, I don't have capital for my trading. I need liquidity. That means I need money. If you're into crypto NFTs, you would have heard things like, I need liquidity to be able to mint a particular NFT. That is what liquidity is. Liquidity is money, literally. It is money. So then, how does this thing I am saying, how does it relate to what we are talking about right now? How does it relate to what we are talking about right now? How does liquidity relate to all of this, right? That is the question that somebody will be asking me right now. Now, liquidity is money laying around in the Forex market. And you can identify this money right here on the charts. Now, this money right here on the chart is what the big institutions identify and use to manipulate you out of your trade. That is why many times you could be buying and the market will start selling. Why? Because you are actually liquidity that has been positioned to be taken out so that they can actually go on their own way. Sometimes the market might look like a buy, and then it is only trying to take you out so that it can start selling. Look at this market here. The market starts buying, and the market created like a buy here and a buy here right there. Look at it right there. We call it a trend. We call it trend line liquidity. Look at that, trend line liquidity. Liquidity right there. And then the market came on. If you draw a straight line, you realize that the market came on and broke that line a little bit. Now that little bit must have taken thousands and thousands of people out of the market on their stop loss. Why? Because as the market moved down to this point, a lot of people would have moved their stop loss to break even. And at this point, break even is to their entry. And at this point, the market will just come and take everybody out. And as soon as it took everybody out, you can see what it did. Straight forward to the downside. A lot of pips to the downside. 800 pips. It has taken enough liquidity. It has taken a lot of people out. And taking a lot of people out is what brings money for these guys. Guys, let me tell you guys, people's losses are what other people use to make money in Forex. The money does not appear from one place. That's why they need more people in the market, so that they can trap you, and then you can lose your money, and then they can make more money. All right. So today I'm just going to talk briefly in the next 3 to 4 minutes about liquidity. Sit with me, guys. All right. So liquidity basically forms around areas where you think you have seen market pattern form. Okay. I'm just going to go into this chart with you guys, so it won't look like I had planned it beforehand. No. So areas where you see places, areas where you see double tops, basically are liquidity zones. Why? Because they believe that people will be expecting the market to come back. This is a liquidity zone right here. Right here is a liquidity zone. They believe people will be expecting the market. A lot of people want to just do double top, but triple top, and then start selling from here. Whereas in real sense, it's liquidity. The market is very likely to do this. Take you out, come back here, and then starts going down. This is what the market is most likely to do. So when you see areas like this, especially obvious double tops and double bottoms, allow the market to play out in those areas before you take your trade. So let us assume you have a situation where the market is giving you bottoms like this on the 1 hour time frame. And we have our double bottom 1 hour time frame, and then you are thinking, should I take it? Should I take this double bottom? The market could be manipulating you. If you take this double bottom, you should just catch your pips up to this point and run away from the market, because most likely the market will do this, take everybody out, come back here, and then reach this point and start moving, right? And when the market does something like this, it has taken liquidity, because a lot of people would have put their stop loss below this point, and then the market has come to take everybody's money. It has come to take everybody's liquidity out of the market. So let's go into the charts and quickly. I like keeping my videos short. I expect that after watching this video, you go and actually do some research with other pairs, following what I have taught. Okay, so when you look at pairs like this, you should be looking at areas of liquidity. Where is the market taking people out? Where is the market taking people in? Okay, these are the areas you'll be looking at. Now look at this area here. Look at this double bottom that the market created here. The market created double bottom. We have double bottom liquidity, trend line liquidity. This is like a trend line liquidity right here. The market created a trend line liquidity. Now you would say the market created other block here, but it did not respect the other block. It did. Look at it. It respected the other block. It gave us how many pips there? If you wanted to catch 30 pips, you would have caught more than 30 pips. It's 40 pips. Give you 40 pips. So if you are good enough, you would have caught 40 pips, and then it took you out. Why? Because there's liquidity. A lot of people's stop loss will be here. A lot of people will be expecting the market to fly right up to this point. There are other risk criteria why the market did not fly, but this is not the time to talk about all those other criteria. Okay, but if you have seen those other criteria, you know this market will not fly more than this. You take your profit at 20 pips actually, and then you're out of the market, because you'll be seeing it more on the smaller time frame. We're actually on the 1 minute, 1 hour time frame. Okay, and then the market came and created liquidity here again, double bottom. Now people that were here expecting it to buy, that were taken out, as soon as they see this double bottom, what do they plan? They plan that, oh, maybe the market has taken us out. It is ready to buy now. And then the market comes and creates double bottom here, and then buys for some 60 pips again, 70 pips, 100 pips. Now, if you are smart, you would have taken this trade. Whereas some people would be waiting for triple bottom right here, waiting for triple bottom. So the market will come and do triple bottom, and then they must have set an entry around this point. Set an entry with stop loss here, you know, take profit up there. And what did the market do? Took them out, came in, played around, took them out again, played in, and then came in again, kept taking liquidity over and over again. Now, what do you do when you see liquidity? That was a major question that a lot of people ask me. What do you do when you see liquidity? Wait for the market to now give you entry confirmations. Now, as a trader, you should have entry confirmations for your trades. Personally, I have about 6 entry confirmations. I don't see those 6, at least 5 of those confirmations. I actually don't always take my trade. Okay, so seeing that the market has started breaking lows at this point, after breaking this liquidity, it created lows. So we are in a sell now. Now we have liquidity above here. We have money here. But people are in the sell here, looking for this market to sell. As you can see, created a liquidity, came back here to test this point. It did not test it here because I didn't want people to jump in. And then the market came again and created fresh lows here. Fresh lows, and then area of imbalance right here. Created an area of imbalance here from here to here. We'll talk about that in just another video. Created another area of imbalance there, right there. Actually, it's from here to here. So with this, it is most certain the market will come into like 50% of the zone before falling back down, or come to 100% of the zone. But as the market has created this low, we should be expecting more sales. So the market comes and there is liquidity here. Now this is a game of liquidity. Look at this. Aside this liquidity here, the market created new liquidity here. And what did it do? Took out that liquidity. Why? Because a lot of people would have been waiting for this trend line like this to happen. What the market do? Took out that liquidity and created new levels. If you go to the smaller time, 15 minutes time frame, you will be seeing new levels here. Now let us quickly just go to 15 minutes time frame and have a look at those levels so that we understand better what we are talking about here. Okay, so let's look for those levels there. Oh, good. Good. So the market has come back up. Personally, if I were to be the one, I would have been looking for entries. Let me see. If you watch the other block video, there is no other block here. The other block is actually here, right there. The other block is actually here. That's where the other block is. Here and here. This the other block right here. This small candle before the fall. That's the other block. So I'm looking for sales in that other block. But the market broke above my other block, created area of liquidity here as well. You can see the double top there, and came here and took the double top out. Also, the area of liquidity I saw from the 1 hour time frame right there came and took it out as well, disrespecting that other block entirely. So if you wanted to enter this trade, I would have entered this trade. Now, naturally, when price goes into my other block, I don't take trade immediately. If price goes into my other block on the 1 hour or 15 minutes time frame, I go down to the 3-minute time frame to understand better why the market actually went into that other block. I hope you understand. Okay, so I now wait for the market to create a fresh order block in those tiny time frames, and they always occur. They always occur, right? So this is the 15 minutes time frame. Now market broke in. Let us see if we would have actually found a trade in this place. Personally, it's not every time you find a trade, but let us look at it. Okay, so the market came, created like an order block here. Created like an order block right here. Just right here. Did the market come back to pick that other block? Not yet. So the market has not done what we wanted to do. But actually, we have to wait for some confirmations. Broke structure, created other block, and failed. Did it come back? No. Came here again, broke structure, created other block up here. Did it come back? No. So that means we won't have gotten any trade here on the 5 minutes, on the 15 minutes time frame. And then the market came here, created this area of supply, broke down, came up, created an order block here. Now this is the other block. This is the other block that the market has finally created right here. This one right here. This is the other block the market finally created right there. So if you wanted to enter this trade from the 15 minutes time frame, as market created other block and fell and broke this structure. This is a structure right here. Lower lows, lower highs, lower low. I created this new lower lows. This is a structure that has been broken. Then we would have just prepared our trade right from there. 10 pips, 10 pips, yes, 10 pips is enough, 10 pips. And then we would have cut, let me see, the lows would have been targeted. Now this is liquidity here. This is 15 minutes time frame. All of these lows we are seeing here is liquidity. They are all liquidity because people will be planning to come, market to come back and take order there, and definitely the market will take it. The market will clear all of them out, and this is also an order block here. So what do? I take my profit at the top of this order block. Yeah, right there. Right there. That is it. And as you can see, the market got to the other block and did what? And bounced off immediately. Bounced off immediately. And I would have got 76 pips off this trade. 1:7.58, which is a very good one. A very, very good one. Okay, so this is how we use liquidity to catch trades and to take profit. Now you can see how I use liquidity to know that the market will clear out some places, and I stayed patient right from the beginning on the 1 hour time frame down to 15 minutes time frame, and I looked at liquidity and I said, oh, the market must reach this point. So I'm not even bothered when the market is doing all of this movement. All I know is the market must clear out all this liquidity before it stops, and as you can see, it actually did. Another thing the market did was created liquidity here too. So before it even, as it came here, it created liquidity. As it started creating liquidity here, mind you, the market has created another order block right here, right here. So the market will come back, as it started creating liquidity, and you will know. So you can take another entry from there. It dumped, created a lot of imbalances here, and then we have fresh entries. On the smaller time frame, there will be an order block here, and it came back into the order block, picked it from the old supply zone up here, this old supply zone. It just came, entered into that supply zone, and then straight down to the ground. So that is about liquidity, guys. If you have further questions on liquidity, you can reach me out on my mail or my DMs on Twitter and Instagram. I will definitely respond to you in less than 6 hours, actually. Sometimes I respond in less than 3 minutes because I try to ensure that people get the best out of my time, because that is why I am here. All right. So there are still many things I will talk about. You really need to be on this channel because there are so many secrets that I'll be letting go. Like let me quickly show you one. You see this old long candle? the market must always, when you see a long candle like this, the market must come back to fill it. As you can see, long candle, the market came back to fill it. Long candle with space, the market came back to fill it. Long candle with space, the market came back to fill it. Anyway, you see long candle with space, the market will come back to always fill it. Like that. Those are secrets that you'll be learning on this channel. So you don't want to even miss any of my videos. All right. So if you've not subscribed, kindly subscribe, like, and drop a comment. I'll see you in the next video, guys. Like I always say, let candlesticks and price action always be the judge. I'll see you guys in the next video.